Well, who knew that the stock market also joins in on Black Friday? This is something new. Clearly the stock market likes to get some Black Friday action going on, and at the moment there is a lot of stocks on sale. It doesn't look it, if you look at the indexes, everything's looking quite calm, but if you dig into the stock market, and especially small market caps, growth stocks, wow, it is getting worse every single day. And what I'm going to do now is I'm going to go through the 3 stocks that I bought last week. This week I have been buying some more stocks, some different ones from these and some of the same ones. I'll go through them in a few days time when we get towards the end of the week. But I'm going to show you the 3 stocks that I have been buying last week, and like I said, with it going lower and lower, I have been buying even more, and I'll update you with them ones in a few days time. If you do want to know when I'm buying stocks and selling stocks in real time, make sure you join the Patreon. But what I'll do now is I'll update you with the 3 stocks that I bought last week. So I'm not going to spend long on this video explaining every single stock in detail, as I have at least a 20-minute video on all of these. I'm just going to go through a quick fire just to keep you updated with what I bought last week. But number 1, a stock that I've not bought for a while is Huya. So I've not bought this one for a while just because it's been bleeding a lot, and I thought, okay, when it just down trending like this, just going to leave it. It looks like it's kind of trying to find a bottom around this kind of $8-ish kind of range right now. So I thought, okay, we're going to try pick some up here and add it into the stock account. I don't want to buy too much more here because I am pretty fully built on it. But when you are giving me it at $8 and your average is like $15, I'm just going to take that, because it is crazy to think that this stock is down at $8. And it's just been a terrible year for Huya. Financially, it's been okay. They've had some hard comparisons to beat because of the CV times. But apart from that, it's been pretty good financial wise, but the share price has just been terrible. Like, they got linked up. I mean, it is crazy to look at this and think like we used to be at like $20 and then we went all the way up to like $31. I mean, a 52 high of $36. I mean, to think that was some point this year, yeah, absolutely bonkers. And it's just been tied up with a merger that didn't get through, and then it had all this Chinese FUD that's out here. And yeah, a lot of people are looking at this stock going, oh, it's absolutely trash, you know, look at the share price, and not actually looking how good the company's performing. I mean, it's a 1.9 billion market cap company, and it's a P ratio of 11. And this company is in the live streaming space. The live streaming space in China, such a huge country with one of the biggest growth areas. And the thing is, like, the negativity towards gaming at the moment and stopping younger people playing games doesn't really matter, because if they can't play games, what are they going to do? They're probably going to go watch streamers play them. So it's one of those industries that's grown huge, and even all the regulation threat that's in this sort of industry doesn't even really affect this company, which is amazing. Now, going on to the valuation, take what you want. This is Simple Wall Street. They do say that it is 85% undervalued. So, I mean, that's down to you if you want to believe that or not. I mean, personally for me, I don't think Huya is probably a $57 stock undervalued right now. I think Huya probably deserves to be a $30 to $40 stock. Personally, I think it could be a $60 stock in the next 5 years. So that's what I would say on that sort of valuation. We're going down on the P ratio. You can see here that it's 10. I mean, the industry is normally 30, the market's normally 17. On a price to book, it comes in at 1.2 compared to an industry of 2.7 and a market of 2.5. And the company's absolutely smashed it. I mean, once again, when we go on the stock chart here, if we zoom out since its IPO, I mean, the stock really hasn't done that much, and then it's even lower than where it IPO'd. So you look here at the IPO, it is half the value of when it IPO'd. So you're looking at thinking, oh right, since 2018, this company's probably not made any progress. Like, the financials are probably really poor on it. Let's just check these financials here. So at 2018, when we came onto the stock market, we currently weren't making money, and we were doing about 2.6 billion, and that's in Chinese yuan, in revenue. So yeah, we'll have a look. What progress have we made in that time? Okay, with 5x revenue, and we're now putting nearly $1 billion in profit with a 10% profit margin. Oh, okay then. If we look at the share price, you would not think that, but yeah, we have 5x revenue and now putting nearly $1 billion in profit in. Let's just check that share price one more time. Okay, there's something going wrong with this stock, and that is exactly why I'm buying it right now. Digging into the financials, really strong balance sheet. You look at the cash balance, I mean, it's got 11 billion in the cash balance right now. If we do try and convert that, I think that puts us around about just short of 2 billion-ish. So right now it has about nearly the cash to market cap on the balance sheet as well, which is is crazy. You could pretty much, anyone could come and nearly buy this company and automatically get that investment back with the cash that's on the balance sheet. Crazy, I know. I think a few people might be a little bit frustrated that they aren't doing buybacks, but I think Chinese companies can be a bit hesitant to do it. But if the Huya share price does carry on staying down here, I would like Huya to potentially do that. But yeah, amazing health. And the recent earnings were fantastic as well. Really good earnings. The share price actually did go up on the day. You can see here it was up 9%. The earnings were pretty good. Revenue was still pretty decent. Obviously, it had very hard comparisons to beat, but still really positive. The great thing was advertising and other revenues grew 137% year over year. And as well as that, the international growth. So obviously, like I said earlier, this is a Chinese streaming company, but they are trying to look international. And the international revenue, I think off the top of my head, was something like 200% growth. Worth checking that with the actual earnings, but I believe it was somewhere around 200%, which is fantastic. So yeah, overall, I mean, I have no idea why it's down at these sort of prices, but if you keep giving me these shares at these sort of prices, I will continue to buy. So I did pick some more Huya shares up last week. Next up, Gang. Same again. This is absolutely crazy. And shout out to Quasi, who actually put this photo on about valuations, and it did make me laugh that you do look at some of the stocks and you go, you understand why they're down and, you know, paying for a crazy sort of valuation. But the thing is, you look at Gang, and Gang's a 443 million market cap company. This was trading at I think something like a 6 price to sales ratio, and it's now down at a 3.5. I mean, I'm just going to tell you right now, this company is growing 200% this year, and it's a 3.5 price sales ratio. I mean, this might as well be nearly a value stock right now. And you look once again, you look at the IPO, and you look where we're at with below IPO prices after a year and a half. I mean, at 443 million market cap, I think about buying the company myself. It's a fantastic company at this sort of valuation. And like I said, it's a 3.5 price to sales ratio. And same again on Simple Wall Street, they say it is currently 56% undervalued. Take of it what you want. Personally for me, I do feel Gang should be somewhere between the $20 to $30 stock myself. So I would say that this valuation isn't too wrong from what they are saying. And if you look at the past performance of Gang, it has done okay, but what it has tried to do is then get onto the US growth that's happening. So you will notice 2019 is really when the US growth started coming in, and you can see that started to get reflected in the financials. It even started to make a bit of a profit as well. Then it got to this point here, and it went, you know what, let's get a lot of this revenue in, let's get these customers in. It'll cost us a little bit in the short term, but we can make profit in the long term. So what they've done is they've started ramping up the revenue, and look at the growth that it has going on here. We've gone from when it IPO'd, basically 29 million, up to 100 million so far. And it can be a profitable company, as you can see. Obviously, the problem is that it's put the investments in place to gain this revenue, but it will get back to profit in the next kind of few years, and that will kind of show here. If you look what analysts are kind of predicting here, I mean, just look at that revenue growth, you know, 30% revenue growth, the potential chance of getting to profitability. At the moment, analysts don't think they'll do it in 2022, but they'll start losing less money. I think there's a shot that a few of these quarters actually turn into profit in 2022, and then profit towards 2023. Now the crazy thing is, if they do start putting in, you know, 10 million profit or something like that, I mean, we've seen it before previously, they can easily do 10% profit margins, and they'll probably be able to even get higher than that. I mean, at 443 million market cap, you'd be buying nearly a company that grows revenue at 30% in one of the hottest industries ever, around about a P ratio of like 40. I mean, that is just, you know, you don't really get growth companies with 30% revenue growth that are profitable at a 40p ratio. And I'll just leave that there. Like I said, you know, we are kind of getting onto the verge of this nearly coming in value stock in the next year if it just stays where it's at. And financial health, fantastic, really healthy, no debt on there. Balance sheet's amazing, got a good amount of cash on there, 50 million. And the only question that people have asked about the ownership side of it, a few people have been spooked because Dermot has been selling off a few shares, who is the CEO and pretty much the founder here. You'll see that he did sell 2 chunks of shares here. Now, I actually had a email from the investor relations team, which I have shared on Discord, basically summing up why this is not a big deal. Even though I have said it's a big deal, I wanted someone from the investor relations team to come out and basically say it, and they did. And Bobby over there actually did a really good job of summing it up, who posted it on the Discord. But the thing is as well is, like, you know, people always overreact to selling shares, and the bigger thing rather than selling is buying. And look what's happened the other day. Seamus McGill, the chairman of the board, bought a chunk of shares, and like the investor relations team said, is that only the other month, you know, Dermot was buying shares, but you know, no one made a big deal of that. And on most of the dips, he does buy shares. You know, I think personally something's going on in Dermot's life where I think he is potentially looking at investing in something and he wants the cash available. And I think that's why he did sell the shares off, which I'm absolutely fine about, because even though he did sell off some shares, what does he still have? After being in the company, which is very rare, to be in the company for the time that he has, which I think is something like 17 years or something, you can see here he still owns 19 million shares, which is a really good chunk. So for the people that have asked questions about that, that's why I'm not worried about that one anyway. Next up, a new stock. So it is Celsius. So as you probably know, I talked about 3 stocks I'm watching, which was Celsius, and I did buy this one. The other one was Mercado Libre, which I am keeping a very close eye on. This is another growth stock that's fallen off the last few days. I mean, look at that, boom. Last 5 days, down 16%. And this is one that's just massively fallen off, like a lot, 33% in like 2 months, absolutely bonkers. So that's another one that is quite high up on my watch list. Fiverr, that's another one, the other one that I talked about, same again, just one that I'm watching. They had really good earnings as well recently, and like all the other growth stocks, they've lost 31%. So I'm keeping an eye on them too, in particular as well. But on the whole list, I did go out and buy some Celsius. Now I'm going to state this very clearly. This, in my opinion, is still probably overvalued. It is definitely not undervalued. Now you might say, why am I buying this if it's still overvalued? I'm not going to try time the stock market. I've learned before that time in the stock market can be brutal and you can miss opportunities. Very much like Shopify, I tried timing it, it didn't work out, it had dips, and I just went, it hasn't gone low enough for me to buy. And because I did that, I missed the opportunity. With Celsius, I've gone in with the mindset of, it's on, let's have a look what dip it's on. It is currently on a 33% dip. That's a lot really for a stock. Just buy it. Buy it, and then if it goes lower, just average in. And that's my mindset. And if it goes up, I've still got shares, I'm happy. If it goes lower, I get the position size that I want, and I average in, and I'm happy. So this is one that I'm currently starting to buy around this $70 range. Realistically, I could see this going to $50, I could see it going to $40, and even at $40, you could argue that it's still a bit overvalued really. So I just want to make that really clear. This is one that I'm buying that I still believe is not undervalued, like a Huya. I think if you ask me what I think of Huya, undervalued. Ask me what I think of Gang, undervalued. Ask me about Celsius that I'm buying it because I think this is going to be a great opportunity in the next few years, and I don't want to miss out like a Shopify. And worst case scenario, I just keep buying more, but it's definitely not an undervalued stock. But I am starting to commit to Celsius. Now the reason why I'm starting to buy Celsius is because I think this beverage company, even though it's expanding past that, could potentially be the next Monster. Now you look here, they're currently doing 5 billion market cap. I mean, Monster's 50 billion. I think the chances that Celsius get to a 25 billion company at least in the next kind of 5-10 years is potentially could happen. Now even on Super Wall Street, it currently says it is undervalued on this one. I don't know about this one. I would say it's probably fair value, maybe overvalued, so I'll leave that one to you. It does have a P ratio of 613. The reason why it's because it's just turned profit, so I would not look at that one too much. And it currently does trade at a price sales ratio of 22, which is quite high, but when you factor in the future growth, you will notice that price to sales ratio does drop down very quick. So like I said, I look at this one, the growth on it has been fantastic, and the great thing is that they don't lose that much money, and they have started to rake up a lot of the profitability. So what you'll see here is that within this year, you'll see they go from 130 million and they're probably going to go to about 300 million this year with 10 million in profit. Now that growth is because the product is very, very popular and it's doing very well. And this is just from the US. This hasn't even got international expansion yet. Now the profitability they're forecasting is 31 million. I don't know. There's a lot of different things that can come in here, like logistic costs. Celsius themselves are investing in the company quite a bit, so we'll see what happens there. I mean, that could happen, we'll see, but the big thing is just looking at this revenue growth. The revenue growth is going to be a massive growth. You know, this is probably going to be a company that in not too long you'll be saying is probably doing, by 2025 is probably going to be doing $1 billion in revenue, and the thing is, the more they kind of scale, that's just going to go more to the bottom line. And you consider if they do, like, in the next 2 years, I mean, analysts have 64 million here, but if they start getting to the point of view where they start doing a 50 billion in profit in the next 2 years, that valuation within 2 years drops so quick. And that's the thing, is that this is growing so fast that sure, it's a bit of a high valuation, and that may mean the share price rocks a bit, but because of the growth they're putting in, the valuation is going to catch up a huge amount. And I think it is basically has a lot of the footsteps of what Monster had early on. Financial health wise, like I said, very clean balance sheet, which is good. Got a bit of cash on here, 61 million. I don't know if they'll raise a bit of cash or maybe they'll leave it, and because they're getting to profitability now, they'll be okay. That's just only something to keep an eye on there. But yeah, overall, like I said, I'm just buying this one, holding it for the next 5 years, and I feel like we have potentially a bit of a Monster energy coming on our hands here. So I'm not going to talk about it too much. I think this is probably worth a full video at some point talking about this and doing one of my like deep dive videos where it's like 20 minutes plus long on this stock. But I thought I'd just let you know on that one that I have opened a new position. So those are the 3 stocks that I bought last week. Hope it was useful. Like I said, this week I've been buying even more, so I'll update you in a bit what I've been buying after we get to the end of the week. But these are the 3 that I started buying last week. So hope it was useful. Hit the like button and I'll see you next video.